Hi everyone, thanks for joining me. Since my last podcast, we've seen the Bank of England reduce the base rate by 0.25%, which appears to be having a positive impact on the market. Let's hope this continues. Who knows if we see a further decrease this year? I'm hearing some saying there could be one in November, others not until next year. As normal, it's a waiting game. Well, today for my podcast, I'm joined by Stacey Wood, National Account Manager at Market Harborough Building Society, along with Iain Smith, Head of Mortgage Distribution at Market Harborough. We're going to look again at the specialist lending sector. Both Stacey and Iain have told me their proposition is the best kept secret in the industry. So without further ado, welcome to you both.
Thanks, Anita.
Hi there.
No worries. You both recently joined Market Harborough, and I know there's been several key appointments, including yourselves. So can you tell me what's been happening?
Yeah, perhaps if I start off with that one, Stacey. So I joined, in fact, Stacey and I both joined in April this year. So maybe just a little bit of background about the Market Harborough. It's had quite an impressive sort of growth period for the building society, and probably, definitely is one of the fastest sort of growing building societies in the UK to date. So over the last couple of years, it's had sort of 20% year-on-year growth in its mortgage book. And the aim is for that to continue, and obviously that gets more challenging as you become a bigger organisation. So the organisation has brought in myself as head of mortgage distribution, and also we brought in Stacey Wood to make sure that our distribution partners, our mortgage clubs and networks like yourself, Anita, have a sort of fully dedicated resource. And that's the first time that the organisation's had that sort of post. So it's quite ambitious in terms of getting behind sort of some senior appointments and making sure we've got the right resource and technical expertise in place to support our distribution partners and, of course, our brokers as well.
Yes, so from your point of view, really it's an exciting time for you both joining. So what makes you a specialist lender?
Yes, I think you're right. We are seen as a specialist lender, but I'm not sure that I like that word, because I think a lot of brokers think specialist straight away. And I would definitely say complex. We're definitely a lender that will take multiple complexities. So, you know, that case that's on your broker's desk where you're just thinking, what am I going to do with this case? It's clean. There isn't any adverse, but it might have foreign currency income, might be a joint borrower sole proprietor for a non-family member, or the property has multiple dwellings that are all on the same title. So it's that multiple complexities. Really, we sit in three buckets. We've got what we call non-standard prime, which is that complex income, complex property, complex scenarios. And then we've got our let business in there as well, which includes our holiday let. And then obviously we do bridging, which you can refer on as well. So, you know, three different areas. I would say we sit in the high net worth space. And the reason I say that is our minimum loan is 200k and we go right up to 5 million. But yeah, complex. So yeah, we are very specialist, but in my mind, I think complex suits us better.
Yeah, I quite like that actually, Stacey. You say, do you look at actual people who've maybe got a bit of adverse credit, or is it just clean apps that you're looking for?
It is clean. Yeah, it is clean, Anita, definitely.
I think sometimes that's the challenge with the word specialist, is that it can mean different things to different people.
Yeah.
But I think we're certainly very clear in terms of our proposition that we're very targeted towards what we would call sort of the prime, standard prime customer. So not particularly targeted at the adverse market at all.
Who would be your typical customer then? Can you give us maybe an example?
Yeah, absolutely. So our typical customer would be, as I say, clean, so prime, not got any adverse, usually somebody with, you know, a larger deposit, under sort of 80% loan to value and a loan size of over 200k. I mean, our average loan size sits much higher in sort of the non-standard prime space is well over 500k. And in the bridging space will be about 1 million, but they've got those multiple complexities. So like I said, their property might have multiple outbuildings or set on a large acreage, and their income is made up of multiple income streams. or they might be high net worth. It's just worth mentioning actually that we deal with a lot of high net worth clients, and that means that we can look at affordability in a different way for them. We will very often monetize assets to be able to calculate their affordability. It's worth mentioning as well that we have a daily credit committee, and I would want the broker to always ring their BDM and discuss the case before they place it with us, because they'll be using us because there's multiple complexities on the case, and the BDM can work with them to put the case together and then bring it along to our credit committee, where they'll get a very quick decision on whether we'll be able to do that or whether it's outside of our appetite. Yeah, hopefully it summarises the kind of customer. It's very complex. They have got multiple complexities.
And I think actually, I mean, Stacey's right. It's that complexity around income. So we do a lot in terms of people that are self-employed, or they've got all the high net worth and they're using investment incomes, or they've got assets that we can monetize in some way, shape or form. And sometimes what you'll tend to find, Anita, is those sort of individuals, particularly the higher net worth, are buying larger properties, and they tend not to be your sort of standard sort of 4 or 5 bed executive sort of home. They'll tend to be perhaps out a little bit, maybe out in the sticks, or they'll be somewhere where they've got, you know, a large building, large property, large acreage that surrounds it, and perhaps outbuildings as well. So you have that sort of combination of the complexity around the incomes and then the complexity around the properties, because a lot of instances your high street lender just won't look at either one of them, and certainly not both of them when you put them together. And I think in terms of also perhaps thinking about us, not necessarily about the customer, but also in terms of our competition. So we, you know, a lot of the areas that we work in would perhaps be lenders such as the private banks would be in that typical space, and we tend to find that we're competing with a lot of the private banks for that higher net worth individual.
Yeah, so really to summarise it, you're sort of the high end of complex lending, aren't you?
Very much so. And we will go up to 5 million in terms of our maximum loan size. So we've got quite an ability in terms of being able to look at, you know, individual customers, their characteristics. And I think the reason that we're able to do that, and I think this is quite important, is because we've actually got a lot of expertise in terms of our underwriting and our staff. So we're not necessarily that sort of computer says sort of no or yes sort of technology. We very much will look at individual cases, and we've got the ability to, you know, the advisor can access and speak to our underwriters and discuss individual cases with them, because there are complexities, there are challenges, and it's not easy enough necessarily just to tap them onto a computer and get a straightforward, 30-second DIP. That doesn't work in this particular space, and you need the ability to be able to speak to experts in the field that understand some of the complexities and some of the individuals and that your brokers' clients will be dealing with. So
you will have seen that we've been platinum rated on FIFO, and that's because we've had 3 years running of gold award.
Wow.
Quite unusual to get platinum rating, and very often we'll see our underwriters named in that, because as Iain said, it isn't computer says no, it is very manual, and the underwriter picks up the phone and communicates with the broker the whole way through the process.
Yeah.
And they're very often named in those testimonials for FIFO as well, so it's something we're quite proud of.
Cool. But so like from my point of view, with our brokers, I'm sure quite a few of them won't really have had any dealings with you in the past. So they've got a case. Talk us through how do they approach you guys? Do they have BDMs out there, or can they get directly through to the underwriter? You just take us step by step through that process.
Surely. I mean, I'll pick that one up. I mean, first of all, it's probably best to say that we lend only in England and Wales. Got 5 dedicated specialist BDMs that work in the field and would be out engaging with your brokers from the Right Mortgage Network. I think we would always sort of very much recommend that the first port of call is a phone call through to one of those specialist BDMs and talk through the case itself in as much detail as what they can possibly do. And ultimately, I think that's where we very much need the kind of broker to be on board, because I think what we tend to see is that the advisor that really understands their client and really, understands all the sort of complexities surrounding the individual circumstances, and have been able to be really upfront and transparent with the BDM, they'll very much look to help and to guide them through. And we can take even to the situation where Stacey touched on the daily credit committees, but we can take sometimes we can take what we call like appetite papers to them, where we're discussing some complexities of a situation to get a sense of their willingness to take that case forwards. And each of the BDMs also has access to our daily underwriter session that we have. So we have that each day. It's the ability for our BDMs to link in with the underwriters and discuss individual cases. And we do that daily so that they can get back to advisors on their inquiries the same day, so that we're not keeping anybody waiting. And that's typically how it works. And then from there, it would be, we're ready, we can move forward, submit the AIP, and then they would just move forward in the normal way thereafter in terms of submitting a case. When the case is submitted, the underwriter will actually give them a phone call just to acknowledge receipt of the case and talk through the individual circumstances, make sure we've all got our ducks in a row, we're understanding where perhaps there might be some additional information that's required and why that's required. And then we would just sort of move forward from there in the normal way. But there's very much that ongoing dialogue with the underwriter. It's not a kind of sort of one touch all. It's very much the ability to be able to kind of come back and forth, because if there's something that they're asking for and advisor or the customer doesn't have access to that, then they're very willing and they've got a very sort of a mindset that's trying to work with the advisors so they can say yes. And we're very open to that sort of working sort of relationship.
But is it the same underwriter all the way through, Iain, or?
Yeah, absolutely. We very much make sure that underwriter owns the case from start to finish. We think that's very important. It gives sort of continuity to the advisor. I think sometimes there's nothing worse than saying an underwriter's looked at it and progresses it, and then another underwriter picks it up and decides to underwrite it again. So they won't find that with ourselves. The same underwriter will own that case from the start all the way through to the offer.
Brilliant. So I know it's early days for you both, but what changes have you seen or made since you joined Market Harborough?
Well, we've made a number of changes. Very soon after Iain and I started, we moved our tiered rates to 2 million from previously 750,000. So that made it easier for advisors to be able to source us, to be able to see the 3 different tiers of products dependent on the complexities of the case, and know what rate they could offer their customers right up to 2 million. And then we've very recently launched a large loan proposition as well that goes from 2 million to 5 million, which is again now tiered with the 3 different tiers and can be found on our product guides online and is available on sourcing too. So really helpful now, rather than the broker sort of being confused as to where they find the pricing. We took the opportunity at the same time to make some lending policy changes. And it's been quite some time since there has been sort of major lending policy changes, but we have increased our loan to value now to 80% on both residential and buy-to-let. And we will take earned income now up to age 75, 100% of second job income, and interest only we can go right to 75% using sale and downsize. So many more opportunities for advisors to use us in areas that maybe couldn't previously in the residential and buy-to-let space. And I think Iain touched on self-employed covers earlier. We now use their latest year plus a projection, which means that we're looking forward for them now rather than looking back 3 years history, which I think again will be really useful for your advisors.
And I think also just on that point, Stacey, I think what's worth noting is we probably do a higher percentage of self-employed because of the nature of the inquiries and the cases that we get. We tend to find that we have a large pool of self-employed applicants there, and what you'll find is that they've got multiple businesses. and the makeup of their incomes can be quite complex in terms of those multiple businesses and holding firms, etc. So I think that's quite an important step we made in that particular direction. So.
Yeah, the other thing I've seen on the website, and forgive me if it was in place before you come, but product withdrawals, you give a minimum 24 hours notice. Is that new?
I mean, it is new, but in fairness, and to be open and honest and transparent, it was there before Stacey and I arrived. But it's funny enough that you touch on that, because we've got some exciting news that will be coming out fairly shortly to the market around a sort of rebranding that we're doing. What we have done is sort of which will sort of provide a more sort of fresher, cleaner sort of look. We'll have an updated website, and brokers should find that information is a lot more easier to find.
Just on that, when you said about being spot on there and wanting a quick, and Iain saying wanting a quick no, once they've got that yes from credit committee, it then obviously a dip is placed and it's a full proper decision in principle with us. And the cases will then very, very rarely fall off after that, because we've gone into such detail at that front, very first interaction with them at credit committee. So I do think, yeah, you've either got that very quick no, or you've got yes means yes. And yes, unless we find out something, that's not been disclosed much later down the line, it's very, very rare that a case would then not continue.
Yeah.
That's good to know. So I suppose moving forward, we've got members out there who maybe aren't in this complex stroke specialist marketplace. What advice would you give them to actually, if they wanted to get into this area of business?
I think we'd be more than happy to do any kind of educational sessions with your advisors, Anita. I'll be more than happy to do that. We've got high net worth specialists, we've got bridging specialists, and obviously we've got a team of BDM specialists as well that would all be happy to do that, because I am certain there'll be solutions to many cases that today are probably being turned away due to the fact that there are multiple complexities or there are unusual income streams or unusual properties. So we're the experts in that. So we're more than happy to handhold through those early cases for them as well, once they get them. So if anybody wants any of that, any sessions like that, please get in touch and we can come out to the offices, or depending on the locality, we can do it via Zoom or Teams, no problem at all.
Brilliant. Iain, is there anything else you want to add to that?
I think Stacey sort of covered it. I think sometimes I think a sort of, dare I say, and I hate using this phrase, but a sort of smaller building society, and I think sometimes there can be a sort of perception around what perhaps they do and all kind of put in the same bucket. I think when we go out, and certainly when we've spoken to yourself, Anita, and explained what it is you're doing, the reaction we get is actually like, almost flabbergasted, both in terms of sort of propositions, in terms of our loan size, in terms of our sort of expertise. And I think it's really, we can do our bit as well, but I think the broker, you'll pick up the phone, engage with us, have that dialogue and find out how we can help and support you. And that's why I would really, I think, if anything from today, really want to sort of get across. I touched on the 5 BDMs. I mean, the exciting news is that the changes never stop, and as well as what we've already touched on with yourself here today, there's even more plans sort of in terms of going forwards, and around the expansion of the team. So we're definitely, although we have a field-based team, we don't have a telephone BDM team, so we're going to invest in some telephone BDM resource. We hope to have that in place over the next sort of few weeks. And as well as that, we've also recognised that there's some areas of the country where our BDMs are that busy that we need to add additional resource within the field. So we're currently actively recruiting to bring on some additional BDM resource, which will give us more people in the field as well as the telephone resource. So we will have more people there to be able to help and support your advisors, which I think is is great news. And I
Yes.
think it shows the intent we've got. I touched on at the beginning about the 20% year-on-year growth we've had over the last few years. I think we've been the sort of fastest growing building society in the UK. You know, I'm here, Stacey's here, because we've got to continue that, right? And sometimes it's great having that initial growth, but the challenge is how do you keep on maintaining that sort of level of growth? So we're investing in the business, investing in resource, as well as investing in technology where it assists us and doesn't take away from the human side of things. So we don't currently have an active affordability model, but that's something that we will be launching before the end of this year. So there's additional investment in that side of it as well. So I think all in all, a really exciting sort of time for Market Harborough, and one that we're very much committed to that broker market and getting our message out there.
Yeah, totally agree. Very exciting for you.
Absolutely.
It certainly is. And yeah, I know Iain's mentioned it a couple of times, but collaboration is key, really. Continue to just keep feeding back to us, because a lot of these changes are being made off the back of feedback from yourselves and your advisors. We are on this drive to be best for brokers and be your specialist lender of choice.
Thanks both for a comprehensive overview of Market Harborough. You've certainly achieved a lot since joining, and thanks for sharing your secret with us. I'm looking forward to following you on this journey. Just leaves me to thank Iain and Stacey for joining me today. As normal, we include any links with the podcast, along with Iain and Stacey's contact details. Either, I'm sure, will be happy to answer any questions, so feel free to contact them. Thanks for listening, and look out for my next podcast.